What's going on?
Now,
What's on?
just turn the camera around. We could just have like 10 minutes of him just parenting. Put that on.
Sorry about that. They're in the bedroom fighting. So
Gotcha.
everybody's still alive though, so I think we're good.
Welcome to episode 113 of Farm to Markets. Today we're talking about universal savings, Trump media, meme stocks, Red Lobster, and fatherhood health problems. Okay, so again, Alex, thanks for the questions. Get that out of there. So Adam Michael of the Cato Institute recently testified before Congress to extol the virtues of his proposed universal savings account, lamenting that savers and investors are often double taxed or worse by way of income taxes, capital gains, dividend income taxes, inherited taxes, and more, and proposed taxes on unrealized capital gains would only add another double tax to his list. He argues a USA, or a universal savings account, where taxes are paid up front and money in the account is never taxed again, and with no contribution limits, would dramatically increase the desire and the ability of Americans to save money. What do you think about the USA?
Well, I think something's going to have to change. Americans are not particularly good at saving money in terms of the rest of the developed world. We're still among the lowest of the OECD countries on household savings rates. I looked into his proposal. There are other ways that it might work. So in some cases, it works like him. You pay the taxes up front and use it for anything thereafter. No questions asked, no taxes ever. Others would work more like an HSA, where as long as you use it for like one of a handful of things, you can dump as much money in there as you want, no contribution limits. Any of these, I think, would be good ideas to try and get the savings rates up. Occasionally, they're in the headlines. I recently saw one earlier this year from the Federal Reserve that said about 43% of people 55 to 64 have zero, as in zero, savings for retirement and will rely entirely on Social Security. The numbers are not looking much better for younger generations as well. So I think really anything that gets Americans saving more money for themselves so that they can pay for healthcare or college education or housing or whatever, or retirement, anything at all, really, is probably not a bad idea. Other countries do USAs or their equivalent of it, and they seem to work fairly well. So I say, why not give it a try?
I don't think I could agree more with this author of this article. I'm definitely for USAs. The way the tax code is written right now is it tells us that the government wants its citizens to be successful, just not too successful. They want to keep that inequality gap within their set parameters. And as this article mentioned, there's a few ways that people can avoid the double or triple tax through qualified accounts. But I don't see these as gifts from the government. I see them as merely pittance for the system that's been robbing its citizens the whole time. Let's put it this way. If I push somebody into a swimming pool that couldn't swim, they shouldn't thank me if I threw them a life preserver. I shouldn't have pushed them into the swimming pool in the first place. The headline should be that Drew is a jerk, not Drew is a hero. So this is kind of what the qualified accounts are like. They are small life preservers in a situation that people never should have had been forced to be in. And this scenario grossly oversimplifies the tax code in the government's favor. In reality, there'd be a whole bunch of rules and restrictions on the life preserver. So to me, this is just kind of getting back to a system where there's less government, which I'm totally for. So yeah, I think USAs are a good idea. I support them. I'd love to see them happen.
Yeah, it's basically just a Roth IRA with no contribution limits.
Yeah.
So yeah, I'm absolutely in favor of this. The one thing I would like to see is that if you could pull the money out, like all the money out to either pay off your house or start a business or something like that, I would like to see that feature added as well. But no, I think that's a great idea. I mean, if you basically can just choose to pay all your taxes now and then never have to pay it again, that'd be great. Whether they actually let you do this or not, I doubt it, because they have the Roth IRA and that has some pretty meager contribution limits, and the 401k is a little bit better, but still is pretty small. So I don't see them just being like unlimited. You can put as much money away as you can, as you want to, and never have to pay tax on it again. I don't necessarily see that scoring well over a 10-year period in their budget. So I'd like it.
Yeah, I mean, what would happen is, say it got passed, and a bunch of people would make good decisions and they would use it and they'd be really, really successful and they have a ton of money. And a
Yeah.
bunch of people wouldn't even touch it. They wouldn't even educate themselves on it. And then the inequality gap would be just, so wide. It would be, some politicians would
Yeah.
would
Yeah.
be thrown up in the garbage can at that point.
No, people who pay attention to this would use the heck out of this thing. I mean, it would just be,
Mhm.
you'd have all your life savings in this invested in, like, Nvidia, and then basically go to the moon, and then you never have to pay tax on it again. It'd be awesome. But yeah, there's no way Congress is passing.
It's not, Congress doesn't, they're
Yeah.
more concerned about the people not making good decisions than they are about the people making good decisions, it
Right.
seems. You can't force people to do this.
Mhm.
And therein lies the problem.
Yeah.
When you have freedom of choices, you have freedom to make good and bad decisions.
If for whatever reason, like whatever fairy tale land we lived in, if this did get passed, I give it like 5 years before it starts looking like a 401k plan with, like, all kinds of like rules and regulations and legalese like attached to it. It'd just be like a snowball. But it'll never get passed.
Yeah, I don't think so.
All right. So this question is still relevant given current events. Is that the Trump media, so ticker symbol DJT, recently reported an annual loss of about 327 million. This follows news that Truth Social has seen about 20% drop in daily active users. One market analysis was quoted saying, "I can't emphasize enough how unusual it is for a company with this little revenue to have this high a valuation. While their share price of DHA has dropped lately, it is still up as of this writing. So it's probably a little under 330. Alex, when you wrote this, I checked it this morning. It's still up quite a bit since the inception of fall 2021. Company spokesperson
Right.
have stated that the company is still in the growth phase, is well capitalized, and isn't focusing on revenues. What do you think of owning the Truth, the Trump media stock?
Well, I guess if you're into, gambling, it's probably an intriguing investment option. What made me really want to write this question is the quote from that analyst. And I feel like there's dozens and dozens, probably hundreds of companies that you could just replace the stock ticker of DJT. And that statement, I can't emphasize enough how unusual it is for a company with this little revenue to have this high a valuation. There are so many companies out there that I think could be perfectly described by this one statement, DJT included. Really, DJT, it's an extremely high risk, potentially high reward, or potentially high loss investment. Like many other companies like this, don't invest a cent that you can't afford to lose on it. If you feel like going on that roller coaster ride, just so be it. Otherwise, I would tell most people not to touch it with a 10-foot pole.
Yeah, I agree with what Alex said. Companies with no revenue or little revenue, they can still have high valuations, but it's not the norm. So I agree with Alex there. This happens all the time. Revenues or future earnings are typically the main drivers or the sustainers of valuation, but hype, speculation, herd behavior, those can fuel a rally, and that's kind of what we've seen with Trump media. Unfortunately, cases like that are usually in bubble territory, and they're extremely risky. Why would you invest in a company that doesn't make money? That seems kind of backwards. I think Trump media is mainly attracting investors who want to support Trump. They could donate funds directly to Donald Trump, or they could invest in something that will directly help Trump and possibly grow in value. And if nothing else, they could get some good capital losses if it goes south. So it's a way for them to have some skin in the game. I don't hear a whole lot of folks talking about using Trump media. I don't hear a whole lot of advertisers paying good money to be on Trump media. I don't even know if it has that many users. So it doesn't look like a very revolutionary platform. Like Alex, I wouldn't touch this thing with a 10-foot pole unless I get the sense that it's actually going to start making some money.
Yeah, I think Drew, I think you and I were talking about this a couple weeks ago, but it's like, who wrote this article? It's like somebody that
Yeah.
had little experience investing, because like I can go through a list and show you a bunch of companies. Like Nikola, that's my favorite example of a stock that was, way too overvalued and didn't make any money. And for the most part, it was justified because they rolled that truck down the hill and said it worked. But it happens all the
Yeah.
time. I
I
mean,
mean, were they born after 2003? Because like I could probably name 50 companies that
yeah,
met this criteria.
exactly. They're all over the place. And again, like, we watched Nikola. That was great entertainment for years, watching that company, which is actually, the stock is actually, I think is come back a little bit. But, as we'll kind of talk about here in a minute, I mean, if you follow like AMC or GameStop, I mean, and all the time in like pharmaceutical companies, it's just, they're all over the place. So I'm like, look, yeah, like Alex said, you could pretty much, say this about any stock. And then I guess the next question is, why would you buy that stock if it's so overvalued and not making any money? Are you sure that's a stock you want to buy?
Mhm.
I don't know. All right.
I mean,
Yeah.
if you were, say you wanted to contribute to the Trump campaign, you wanted to support Trump,
Yeah.
and you wanted the potential for some huge losses, that might be a viable option.
It would be, but yeah, like, again, I think you already said this. I would just contribute money to the Trump campaign,
Right.
Right.
because you're not really. I don't know if you buy, like I can't imagine you'd be helping that much if you buy the stock. I mean, the funds could be better used if you just give him the money, and then he can use it directly for campaign purposes, and then he doesn't have to like doctor any spreadsheets or anything like that. Just kidding. Jokes. All right.
Yeah.
All right. So following recent surges and crashes in the price for meme stocks like AMC, GameStop, and others, investing naysayers are pointing out the big losses by investors who bought the stocks too late. Investors who bought the top of GameStop, for example, lost a combined 13.1 billion in just 72 hours. Critics have used this as a way to argue Wall Street is just a casino and is rigged against the little guy. Most investors and analysts point out that for every selling high, someone has to buy high also, and it's just a feature of the system. If you can't stomach the losses, don't even invest in high risk assets. What do you think? Is Wall Street rigged against the little guy?
Uh, no, I don't think so. I mean, unless you're getting into too big to fail territory, I don't think it's really rigged against just about anybody. If you don't like how the big companies get away with murder, just do what the big companies do. Follow their investment strategies. So I don't think it's rigged against the little guy. I do think, however, that it is very unforgiving of mistakes. So if you buy high and sell low, you're going to lose money. It's really not much simpler than that. So if you can't handle the losses, like the question said, if you can't handle the losses, don't bother with any of these stocks. So it's not rigged against you. It's just not very forgiving of when you make a colossal blunder with $100,000 you can't afford to lose.
Wall Street isn't rigged against the little guy. Life is rigged against fools. There's a saying, a fool and his money are soon parted. That's exactly what's going on here. And we've talked about this many, many times on this show, but short-term trading is gambling. When you're swing trading, when you're day trading, you might as well be at a casino. And if you think casinos are rigged against the little guy, then yeah, I guess you could be right. But to me, it's just an excuse for people that know the risks and they lose money. They try to blame it on something bigger than this. Like this article said, there's two sides to each trade. Someone has to do the buying and someone has to do the selling. And odds are, if you're short-term trading, there's someone on the other side of that trade who's smarter than you or who's better than you at this, or they have better resources. So don't short-term trade, don't swing trade. Invest in the fundamentals of long-term investing, and you won't be one of these fools.
I was shocked to hear that 13.1 billion in losses. You will never hear this at the office water cooler because everybody's going to tell you about the first time they bought AMC. They're not going to tell you about the second time when they bought it at its all-time high, thinking it was going to go higher. So this is this is the information that you need because most people are not going to talk about it. Like $13.1 billion in losses. Like this, and this isn't just like if you bought it and you were one of those people who lost money in it. I wouldn't feel bad because it happened to everybody. But at the same time, it's just incredibly risky. I mean, people have to understand that before they buy this stuff. Is that if it's already gone up like 100%, at that point,
Yeah.
the laws of I think I can't remember who's the guy that wrote the article or wrote about financial physics. Do you remember that? Was it Graham or who wrote about financial physics? I can't remember. But at some point, financial physics say that it's going to come back down, and if it's just gone, in like a short period of time, like gone through the roof, chances are it's coming back down. So,
Well, even if it doesn't come back down, if you're seeing like triple digit returns in something, chances are you already missed the boat. So
yeah,
don't be somebody else's bag holder.
exactly.
Unless GameStop like patented the cure for cancer or something.
Yeah.
If their future revenues look like they were going to merit triple-digit returns, that's the only case I could ever make for piling into a stock that's going up like that. But that's not the case with AMC or GameStop. They don't make a whole lot of money.
Yeah, I mean, Nvidia did a pretty good job. I mean, it went up, and then its
But
earnings.
Nvidia is giving the world AI.
What's that?
Nvidia is giving the world artificial intelligence.
Yeah, and every
And
time
yeah,
every time they post earnings, like it always supports like whatever it has. Microsoft's been kind of like
Yeah.
on this on a smaller scale. So everybody's like, it's way too overvalued, and then they post their earnings, and it's just like, whoa, no, it wasn't. So yeah. So Red Lobster, the largest seafood chain restaurant in the U.S., is in trouble. It just filed for bankruptcy, and while it's not dead and buried yet, some analysts are already autopsying the company. Two main culprits seem to have caught the attention of investors: Endless Shrimp and private equity. Endless Shrimp, a wildly popular promotion from the restaurant, was supposed to bring in consumers and generate a lot of revenue. In reality, the company lost millions of promotions as people came for the shrimp and stuck to it, literally eating Red Lobster to death. Meanwhile, other analysts point to a private equity firm's meddling in the business, forcing one leadership change after another and demanding the company enact multiple turnaround plans in a short period of time. Which do you blame for Red Lobster's decline?
so I'm going to say it's a combination of both. These kind of businesses have been kind of fading for a while. If you look at the larger industry news, companies like Cracker Barrel, Pizza Hut, restaurants like that, Outback Steakhouse, part of larger chains or conglomerates of these kind of like step up from fast food kind of casual chains. They've kind of faded because millennials don't eat at them. Not very much, not like their parents did anyways. So they're kind of fading to begin with, but the more you read about what the private equity company behind Red Lobster and some of these other companies have been up to, it seems like that they're trying to hasten it along and basically strip the company for parts and make as much money as they possibly can out of them before they die. And regardless of how you feel about that, whether it's moral or immoral, it kind of seems like that's what's starting to go on. The story of Red Lobster was kind of interesting. The private equity firm forced Red Lobster to sell them the land that the restaurants are on, raise their rents, and then sold off the rest of the business. So now Red Lobster has higher rent, doesn't have the land underneath it as an asset, and its business is in decline. So it sounds like they are just kind of hastening Red Lobster and, extracting as much wealth as they can out of the company while they still can. Again, whether you think this is a good thing or a bad thing, I do think that that's a pretty big component of what's going on with Red Lobster and other companies like it. Toys R Us went through the same thing for other millennials who remember that company. So for better or worse, that seems to me at least a portion of what's going on with Red Lobster. They're just being put out of their misery, I suppose, before the process drags out for years.
Yeah, I don't really know. I feel like I'm kind of playing armchair quarterback because I don't know a whole lot about the inner workings of Red Lobster. But I don't know what came first, the chicken or the egg. I don't know if private equity stepped in and started forcing them to do stuff because Red Lobster made bad business decisions, or it was the other way around. But to me, they're not positioned very well. I associate casual dining restaurants like Red Lobster kind of like to owning a home on the golf course. They were really popular with the older generations, but the younger generations aren't too fond of them. Red Lobster, it seemed like they did very little marketing to the younger generations, um, and and obviously they sold food for a loss. Now, I'm not a business genius, but businesses are meant to make money, and I understand sometimes it's strategic to realize a loss if it captures other sales, things like that. But they made this mistake twice. In 2003, they had bottomless crab, and they lost a ton of money. And then 12 years later, they decided to do it again. What? So I think if I had to pick a bone, I would say it's their bottomless seafood dishes that kind of that got the snowball rolling. At that point, private equity is probably just looking for a way to get out of that deal.
Yeah, when I read about the endless shrimp platter or whatever it is, so not only was it that kind of like like a loss. I mean, I think it was intended as a loss leader. Like you do it to get people in the door, they buy other things. But apparently, the endless shrimp was so good that you didn't want anything else. Also, from what I heard, is that one of these, the CEO, basically instead of doing like competitive bids like into the market, like who's going to give us the shrimp, who's going to give us the batter, they basically narrowed it down to one company, and they didn't follow their normal protocol of getting a competitive bid and like vetting companies. The CEO basically was just like, look, we're just getting it from this company, and he override a bunch of protocols and stuff like that, and it ended up costing more for that shrimp than they could have actually gotten in the marketplace. So that's definitely one aspect of it. The other thing, like constant turnover, is going to sink a company as well, because you get repeated leadership with like different visions, and they're all trying to it's like when you go see a different doctor for the same thing, and they all have their idea of like what you want to do. It's like usually it's better if you stick with one person who can kind of take you through the process and knows like the whole history and like what's gone on and all that kind of stuff, and you don't have to start over with somebody new. So repetitive change also is an issue in this. And I honestly, like, I can't remember like ever wanting to be like, I think I've been to Red Lobster once, and I just it's never been something like Olive Garden for the millennial generation. When I was in college, everybody was going to Olive Garden. Everybody wanted an Olive Garden in the Valley. All the sports teams. When I traveled with baseball, they always, if there was an Olive Garden there, we were there. But it was nowhere else. It wasn't like we were going to like Red Lobster and like doing the bottomless shrimp, because I don't know if that many people are want that much seafood. I think Italian food is just a little bit more palatable for most people. So
I think those two companies, though, are both part of the Darden group,
Yeah.
aren't they?
they're all part of Darden's. Yeah, and there's a number of other ones in there too. I think Outback is in there.
Yeah.
And they're all part of the Darden's restaurant chain, which I think is done all right. But like kind of like you said, is I think I don't know, like millennials are like snooty or what, but I think like I at least the people I talk to nowadays, they're usually not talking about going to Outback or Red Lobster or whatever. But
It was funny. I think one of the lines in the article was the bottomless crab and bottomless shrimp. It wasn't the first or second serving that hurt them. It was the third, fourth, and fifth.
yeah,
Like people just went nuts.
that's a
And
ton of
Yeah.
some places do like bottomless breadsticks and things like that. The bread is fairly cheap, when you have a high priced item like seafood, meats, I can see some
Right.
big problems.
When I was in grad school, I traveled with the sports teams, and we were at Olive Garden one time asking the guy about the never-ending pasta dish. And for University of North Dakota, I mean it's Division One, but it's kind of on the low end of Division One. You get like the University of Nebraska football team into Olive Garden, and they all order the never-ending pasta. Like you're pretty much going out of business because those guys they can eat, and they will take advantage of the never-ending pasta.
Yeah.
So I'm surprised. I don't even know if they do it or not. But yeah, Olive Garden, the waiter that we talked to was just like, yeah, they get their money's worth of the never-ending pasta at Olive Garden when sports teams come in there. So it's kind of interesting. All right. So the last one here is that choosing to become a parent could end up shortening a man's life. So there you go. A groundbreaking study reveals that fatherhood may take an alarming toll on men's heart health as they get older. Researchers from Northwestern University and the Ann Roberts the Reed like Children's Hospital in Chicago found that cardiovascular health tended to be worse for fathers compared to men without kids. The research, published in the AJPM Focus, I have no idea what that is. Clear this here. Basically, like a peer-reviewed journal, found that as men age into their older adulthood, those who have children tend to have worsened cardiovascular health compared to childless peers. This was determined by looking at factors like diet, exercise, smoking, weight, blood pressure, and blood glucose levels. The research theorizes that the added responsibilities and stresses that come with parenthood make it more challenging for fathers to maintain a healthy lifestyle, though habits like exercising regularly and eating nutritious food. Simply put, having kids can stretch a man's time and resources thin. Is this true? Are your resources stretched thin there, Alex?
I don't think there's any shocking result that I saw in this study. Less time for your hobbies, less time to exercise, your diet goes downhill. Some people cope with it with, alcohol or cigarettes or whatever. Eat more junk food, all that stuff. I think this is maybe the least shocking medical study I've ever seen in my entire life. So no disagreement at all.
Yeah, no disagreement here either. I totally agree. It all makes sense. I've experienced a lot of that, but I wonder, is it, I want to know what, because, after 18 or so, children leave. So you still have a very big chunk of your life to get back on track. And even if I feel like in the younger years of child rearing is where it's the most stressful. Maybe I'm wrong. I haven't been there. But yeah.
Yeah, no, I think you're right. And I think there's also other research that says that, people with, like fathers with kids, they actually, later on, I mean, I think ultimately I've seen research that says they actually live longer because now you have like kids and stuff like that in your later years to kind of help take care of you, and you have like those social interactions. What I've read is that it's actually the moms that take the brunt of it because not only do you have to put up with your kids, you got to put up with your husband too. And I've seen actually some studies that say like, divorced women actually tend to like their health tends to improve. So I don't know. There's that for you. But yeah, no, it's definitely stressful. Like I spent a lot of today texting my wife, trying to figure out if we should take my youngest to the hospital or not because he may have eaten a battery. We're not sure, because we found 2 batteries, but we couldn't verify there wasn't supposed to be 3. So I'm like looking up the brand of like whatever the toy is, like trying to determine if they had 3 batteries instead of 2. It appears that there's 2 and there's no emergency, but there's always that in the back of your mind. It's like, oh, there could have been 3. Like, should we take them or not? So yeah, it does when they're younger, it's just like, yeah, it does tend to increase the stress a little bit. So all right, well that's it for episode 113 of Farm to Markets. So we'll see you again.